All right, everybody, welcome back to the most boring and informative Portland housing market conversation podcast. We don't know what this is. We need a title. We might need like an intro jingle. But we're going to get started today by talking about interest rates, Vanessa's experience with interest rates, how it's impacting clients she's currently working with. We're going to have some conversations about sellers. But I was just looking as I was getting ready to pop on here. And yesterday, interest rates were 7.6%. And that is the highest they have been dating back to the year 2000. And obviously, we know this is going to have an impact on the housing market. Today in Portland, in the Portland metro area, there's 4,497 available listings. And year to date, the month with the most pending sales we've had, it's the month of August, and we had 2,155 pending sales. So if you've been watching this or paying attention to what we've been talking about our last couple of months, there's almost two homes, or actually there's more than two homes on the market for everyone who's currently buying a home in the Portland metro area if we think about the averages. So Vanessa, tell me, just like helping navigate people through these higher interest rates when they still want to buy, because buying real estate still makes sense, right? On any 10-year period, people own real estate, they feel like a genius. But obviously it's having an impact on our clients. So how are you helping guide people through this higher interest rate environment?
Yeah, well, right now, with interest rates being at like about 7.5%, a lot of the homes that are on the market are just not affordable. Even the condos that are like really cheap, in terms of the span of pricing right now. Um, what we have been doing is, if it makes sense for you to buy right now, what can you afford? So start there with like your monthly payment. What can you afford? And then we work backward. So, working with a lender, getting really clear on how much you can afford creates a plan for us to be able to pinpoint a purchase price. Even if a purchase price is a little bit high, we're trying to either get some seller credits in terms of interest rate buy down, which can save buyers, up to $500 a month. And couple that with the price reduction. But interest rate buy downs from sellers helping out have been giving the most savings per month. So
Yeah, and let's talk about that real quick, right? Because you said like you've been able to save people $500 a month with these temporary interest rate buy downs or full buy downs just by negotiating a credit from the seller, which obviously is like negotiating a discount on the property. When we say $500 a month, some people might go, "Yeah, that's a lot," and some people might go, "That's not a lot." I always think of it in like, what does that save me annually? $6,000 in the first year, $12,000 after year two. That is a considerable amount of money. And when you look at the average income of the average Oregonian, it's significant. I actually ran a calculator. The average sales price during the month of August, because we don't have September numbers yet, was about $600,000. And if you looked at $600,000, oh, here it is, this one, a $600,000 purchase with 20% down, so a loan amount of $480,000 at 7.6%, your payment would be $3,972, assuming the taxes on the house were 1% as well. It's $6,000. So $48,000 a year for housing. That is really steep. If interest rates dropped to 5, if interest rates went down to 5%, which we're a long way from 5% if we're at 7.6%, those same circumstances, the payment's $3,160. So $38,000 a year for housing versus 48,000. That's significant, and that's why we're seeing the challenges in the market and having these rate buy down opportunities. You're right, that is something that can be negotiated now. And you were just talking to me before we got on here about how most agents are still scared to negotiate on behalf of their clients. So let's talk about that real quick.
Yeah. So what I've noticed is a lot of people are waiting for permission to offer a lower price for a house in terms of a seller reducing the price of the house, a price reduction. Um, but you're not going to get the best deal when you're waiting for that. So what we've been doing is not waiting for permission. They're going to reduce the price, period, if the house is sitting on the market.
Yeah.
So why not just
And define sitting. Is that 6 months? Is that 6 weeks? Like, help me define that.
well, I mean, it houses didn't used to sit a year ago, a year and a half ago. Um, the average days on market are different per house depending on the area that they're in. But say the average days on market for one house in, Sherwood is 45 days.
Yeah.
When it comes to like 25-day mark and they're still sitting on the market with no offers, they're probably going to do a price reduction. So instead of waiting for them to do a price reduction, I come in with an offer with the same amount that they probably would reduce their price,
Yeah.
and they'll accept rather than reducing their price and then having maybe more buyers want to offer, and then we're competing at that point.
Yeah. One thing that's interesting about this market, right? And multiple offer situations are indicative of they're in every market, even when values are declining. They were in the Great Recession. But we still have this recency bias that most houses are going to get multiple offers in the first weekend, right? Mm-hmm. But it seems like it's always been true. I've been selling real estate since 2007. That if a house is on the market for 2 or 3 weeks and they don't get their price, they're probably not going to get their price. Mm-hmm. And you're right. It's pretty simple to negotiate away that next price reduction. Now, if you're a home buyer, you can risk offending somebody and lose that house. And that's okay, mm-hmm. right? When there's 4,500 homes on the market and there's around 2,000 going pending a month, it's okay if someone gets mad at the offer. Here's what most people probably aren't going to get. You're probably not going to get a 10% discount. You're probably not going to buy the house at 90% of list price, right? Like, that's always been hard. $60,000 discount on a $600,000 house. But 20, difficult, but doable in certain circumstances, especially depending on the motivation of the buyer. So let's...
And the seller.
Or sorry, that's what I meant, the seller.
Yeah, yeah.
So let's actually flip-flop this to sellers, right? Because, mm-hmm. Every time you're driving in your car on Instagram doing videos, it scares me. I'm like, I hope Evan's driving.
Oh, I know. No hands, no eyes.
Yeah. But you've done this talk about, like, there's a magic number for each house. And I know you're having that conversations with sellers when you're advising them what to do. In certain price points, I was talking to one of my would-be sellers coming up on the market in a couple days, and I was like, look, here's the reality. There's 85 homes on the market like yours, mm-hmm. like in your price band, and there's 30 that are pending. Yeah. And we're adding more homes to the market like yours that are getting absorbed. And you have this magic number talk. So take me through that.
Yeah. Well, gosh. Okay. There's a magic number that a house is going to sell for, period. Whether you're a buyer or a seller. Like, there's going to be the magic number that the seller agrees to, basically. So what I have been doing with sellers is, you can start at a number because you need to start somewhere that seems reasonable, and you test the waters. And I like to get an agreement from my seller that, like, if first of all you look at the average days on market, say that they're 45. Okay, so your house probably will go pending in 45 days or less. Yeah. If we list your house at 600,000, and it does not get any movement, any phone calls, any showings, any offers within 14 days is kind of a lot, honestly. I want to, like, 10 to 12 days. Yeah. We need to adjust. We need to find the magic number. So you are basically, planning ahead for slight adjustments because this just goes to show buyers too. Okay, buyers that are looking are going to be looking at a certain price point. They might not even see your house if it's at 600,000. You might need to get it into that 575 range so that the right buyer can see your house. Um, every house will sell for the magic number, and you don't know what that is until you adjust,
Yeah.
so you can get the right visibility.
And you're just talking about having a strategy when you put a house on the market. So if things don't go your way, here's what the next step is, which people need to have, because
Yeah.
here's what's happening in the market today as well. We're in a statistically declining market. The average sales price year over year is 3% lower than it was the same time last year. I was talking to someone who wants to list next year, and I said, look, I don't have a crystal ball. I can't tell you where rates are going to be. But I can tell you, in the last year that we've been talking about you wanting to sell, home values have decreased almost 5% in your area. And most people buy houses like they buy a car. They don't really care about the debt they're taking on. They care about what that monthly payment is.
Mm-hmm.
And every time interest rates increase, the value of your home seemingly is going down a little bit. Because people aren't buying the price, they're buying the monthly payment. And we know that because during COVID, when interest rates were nothing, when you could borrow an additional $50,000 or $100,000 over 30 years at 3%, people threw around that $50,000 number like it was nothing.
Mm-hmm.
And today, we just don't live in the same environment. With the cost of borrowing money increasing, not just on houses, but on our cars and on our credit cards, and what's going on at the grocery store, right? It puts pressure on people's monthly budgets. And you're right, if you have a house that should sell in 45 days and after 2 or 3 weeks on the market isn't favoring you, the feedback from the market isn't that we're getting closer. The feedback's, like, to your point, if we're not getting showings, the feedback's that it's quiet, right? Nothing's happening. Other comparable properties are selling and ours aren't. Well, it's probably our price, and this is what our next step is.
Mm-hmm. Yeah, I think it's really important to just come up with that plan and make it really clear to the sellers, get them to agree that they'll trust you. And it's not just you, it's the actual data that houses are selling for right now. And then, come up with a plan every, 2 weeks to adjust.
Yeah.
Because they want to sell.
Yeah, and there's outliers in every market, right? Sometimes, some agent comes into town from a different marketplace and something looks like a really good deal or a bad deal, or it doesn't matter. Maybe it's just a big commission and a deal goes pending, right? And that's the outlier. That's why we look at data and then we listen to what's going on in the market.
Mm-hmm.
Like the data helps guide better decision making for buyers and for sellers. In the beginning of the year, we were talking about how we have a housing shortage. And here's the reality. Even with 4,497 listings on the market, year to date, we have had a shortage of new listings come to the market. Not as many people are moving. Mm-hmm. And that's why we haven't seen this huge depreciation in values. We've just seen a slight one. Right? Like we've lost 3% in home values. I mean, on the average house, we're talking $18,000 on an asset that most people keep for 10 years. That if you look at 30-year Portland averages, the average home price doubles every 12. Mm-hmm. That 3% is going to probably be made up pretty quickly, if interest rates go down. Or, my personal belief is we could end up losing another 5 to 10% of values in the Portland metro area in 2024 if interest rates stay in this 7% range. Well, if you bought the right house and you had a payment that you can afford and you knew you were going to be there for a while, history would tell you that the market's going to turn around, you're going to live there for 10 plus years, you're going to do really well on that asset. Mm-hmm. All the while you have tax deduction, your kids might be in the schools you really prefer them to be in, or, I live really close to my mom, so I get to live down the street from my mom and my sister. Right? There's a quality of life equation here too that isn't just a financial implication.
Right. Yeah. Hold on to it. buy something if you can afford it, hold on to it for as long as you can, and you will make money if you need to move or sell, you know?
Yeah.
It's it's just all about if it's the right time for you to buy, you know? And if it is, we can get a good deal right now.
Well, let's talk about that. What do you think about buying in like the wintertime, right? Because like it's almost October, then
Mm-hmm.
it's going to be November, and then it's going to be December, right? And we
Yeah.
know that's the busy holiday period. But
Mm-hmm.
maybe I have a lease coming up, or maybe I just sense right now is like a good time for me to sell my townhouse and go buy one of the multitudes of really expensive homes that are on the market because my family needs more space. How do you feel about the winter months and helping people navigate the market? What have you seen historically?
Well, I mean, it's slower. There are less sales in the winter months, but if you are in the market during those times, you will get a better deal because there are less people buying, so there's less competition. I mean, I personally get really excited when I get a deal anywhere, you know? I like to shop at Goodwill. So it right now I am like trying to tell everybody I know, like if you've ever been in the market for a house, like I can get you a really good deal right now. I just got someone a $35,000 like price reduction and seller credit on a $500,000 house.
Which by percentage is a big discount.
Huge. Like the
Yeah.
seller, it's a vacant house. The seller obviously doesn't live there anymore. They need to sell. It's like the best deal ever. And we didn't wait. We didn't wait until they were going to do another price reduction.
Yeah.
We just said, well, what's the worst they can say? You know, they'll counter us if they didn't want, you know, to give us that good of a deal. But
Yeah, worst case scenario, that agent gets mad at you and your client has to move on to the next property. And we already talked about it. There's multiple properties for every buyer in the marketplace right now. We don't know when the perfect one's going to come on the market for them, but a total truism in real estate, since I've been doing this for so long, is I'll always find another house that you'll love.
yeah,
Never had a client miss out on a house and just be like, well, now I'm never going to buy a house because that was the one. There's always another
yeah,
house that someone's going to love.
yeah.
And that's,
And you'll
and that's
end
just
up
the
in the
market.
one that you're supposed to be in.
Yeah.
Yeah.
Now, how about if I'm a seller, right? Like, I think about on the sell side right now, there's different product types in the market, right? Because not every piece of the market, as you referred to earlier, sells at the same pace, goes at the same rate. I think right now, if you have like a average price point home,
Hmm.
those properties are still going to continue to move. Now, if I'm a 4,000 square foot home on Bull Mountain with a 3-car garage for $1 million, that's probably going to be a little bit more challenging of a home to sell this winter,
Hmm.
unless it's a really special home. Because usually that's going to be a move up buyer, someone coming in from out of state or another city that's purchasing that home. And the payments on those homes right now are, $72,000 a year, $80,000 a year for my housing payment, depending on how much I'm putting down. So, what are your thoughts for sellers looking at the winter months versus maybe looking at 2024?
Yeah, I think like we talked about, the average sale price. So if you're above the average sale price of 600,000, it's you're going to have less buyers. You're going to have less people, less chances of selling your house in a market in a time of the year that's traditionally slower. If you're under the average sale price of 600,000, you'll have a better chance of selling your house no matter what time of the year it is. Um, I I'm still seeing multiple offers on the best houses under the average sale price in Portland. Um, so yeah, under $600,000, I think that, you know, you should put your house on the market now so that I can have a buyer buy it.
Or you could list it with Vanessa. She could list it for you too.
Yeah. Oh,
If you have questions about your value.
yes. Yes.
Okay.
Yeah.
So if someone wanted to get in touch with you, it's a great way to segue. If someone wanted to get in touch with you about buying or selling real estate, let's just give them your email so they could shoot you an email and then you guys could go from there. How would they get in touch with you?
Yeah, my email is vanessa@hillshirerealtygroup.com. And my phone number is 503-998-4273.
And if you guys want to see more conversations like this, if you guys want us to talk about a specific segment of the market even, let us know. Like, shoot us a comment or an email. We'd be happy to do that. Like, subscribe, share this with someone that you know might be selling real estate in the next year, and we'll see you next time.